Hey everyone, welcome back to Valareso Capital. On today's video, we're gonna go through the market update. We're gonna take a look at some of the market action that we saw last week. It was actually a pretty exciting week, really a strong week for the bulls. So we're gonna cover all of that information. We're gonna take a look at many of the ETFs of the market. We're gonna go through the NASDAQ Composite. We're gonna go through the SPY. We're also gonna cover the Qs, IWM, DIA, and I also want to take a look at some of the ETFs such as the XLF. We're gonna go through the XLV, and also I want to take a look through bonds, the TLT, and we're gonna take a look at kind of a more wide range of the stocks that we usually do on these market update videos. But I want to actually take a look at the big picture that we're seeing. So because we're seeing a really strong move to the upside. I think that this is going to be a really tradable bottom, at least in the short term, and it already started. Right now we're getting a little bit extended in the market, so we're going to cover all of that. So welcome back guys to Valareso Capital. If you haven't done that already, make sure to like and subscribe, and also follow me on my Twitter account at Valareso Capital. So let's just jump directly into the charts. Let me just grab my drawing tools so we can take a look at the market. So the first chart that I have here in the screen is actually the NASDAQ Composite. So for anyone who is familiar with the NASDAQ Composite ticker symbol in TradingView is gonna be the ISIC. So I like to take a look at the NASDAQ Composite because it covers a lot of the growth stocks that we tend to trade as traders, since they offer a lot of movement and a lot of volatility that we can profit from. So the first thing that I want to point here is this really important point of inflection that we have right now. So this point is going to come somewhere around 11,600. So why is this point a very important inflection point? First of all, you can see that this has acted as a level of resistance for quite a while now. So if you just take a look at the market from this perspective, you can see that we are starting to form a very significant base. You can see that this base has acted as support many times in a row, and it has also acted as resistance many times in a row. Now, do we expect a breakout? I think that we might actually see a breakout here. However, we have to take into consideration two very important things. First of all, we had a very strong move from the downside. So this was basically a straight up move from the bottom all the way to the top. So we have to understand that most of the buying done by institutions, but a lot of traders, was actually done right here. So many of the people that are starting to buy right at resistance is because they are most likely just chasing the move in the NASDAQ Composite. So we have to have that understanding that price right now is really extended. And the only way that price continues to move higher is when the only time when the market continues to move higher happens when there is an imbalance between buyers and sellers. Just a fancy way of saying that there needs to be more buyers than sellers. So at this point, it's very unlikely that we're just going to continue to see a strength to the upside. We probably can have a lockout rally, which means that we're going to see more short covering and perhaps a move all the way to 12,000. So that's definitely a possibility, but I'm leaning towards the probability of a pullback right back down into that 21 exponential moving average. Now that's the point number one. What is point number two? Let me just zoom out a little bit here. Point number two is going to be that this is the first time. Well, it's probably going to be the second time since this bear market started that we're actually going to test that 200 daily moving average. So you can see that we didn't test that 200 daily moving average the last time that we had a move to the upside. So the probability that this 200 daily moving average is going to act as a level of resistance is actually pretty high. So my expectation is that given that we are at a very important inflection point in terms of price action, and that we are also at a very important inflection point based on moving averages, I think that the probability of a pullback is actually pretty high. Also, we have to take into account that on Wednesday we have CPI. Is CPI gonna be the thing that is gonna carry the market forward to the upside or to the downside? That's actually kind of the question that we all have, but we have to understand that the CPI report is a binary event. And given that it is a binary event, it means that anything can happen, and that having a lot of risk going into the event doesn't make much sense. So that's gonna be point number 2. Now, what are the levels that I'm gonna share? Of course, the level is going to be 11,600 as a level of resistance. And then the first level of support is going to be this 21 exponential moving average. Now we have to have the understanding that the 21 exponential moving average is a moving target, meaning that if we start to consolidate around these levels, the 21 exponential moving average can start to rise, meaning that the pullback can be slightly higher if the 21 moving average starts to move to the upside, if we see some consolidation. So we have to be aware of that. So the levels are going to be that 21 exponential moving average, and in the 21 exponential moving average as support, and that 11,600 as a level of resistance. And now let's just take a look quickly at the ETFs that I told you that we are going to take a look at. So the first is the QQQ. The QQQ looks exactly the same as the NASDAQ Composite. You can see that we are at that level of resistance as well, meaning that we are right at that double top, and we are also at that 200 daily moving average. The expectation is exactly the same. We don't need to cover anything else. We just need to understand that the support is going to be the 21 exponential moving average as well, and the level of resistance is going to be basically 296. That's going to be the level of resistance that we're going to be watching. Also, understand that if we happen to drop below that 200 daily moving average, that means that we're going to have a kind of a bull trap, meaning that everyone who bought the candle that closed above that 200 daily moving average are basically going to be trapped. So the probability that all that people are going to sell their position if we see a pullback increases the probability of a very fast pullback all the way back down to the 21 exponential moving average. If we jump into the SPY and then the IWM and DIA, we're going to see kind of the same price action, right? You can see that we had a pretty strong move. You can see that we had a squeeze. We moved to the upside. Trend oscillator above the 50 line, so that was also pretty bullish. And you can see that that 21 exponential moving average served as support as we continue to move higher. If you follow me on my Twitter account, you can see you are probably aware that we were talking about that second extension, that 1618 extension, measured from this level right here to this level right here as a possible level of resistance. That actually happened precisely on Friday. So it was a pretty strong move to the upside. It was an amazing trade. And you can see that we actually found a lot of resistance. The expectation is going to be the same. For 408 is going to be that first level of resistance. 21 exponential moving average is going to be that first level of support. Perhaps the 8 exponential moving average, but I'm leaning towards a reversion all the way back to the 21 exponential moving average. And then the ultimate move continues to be all the way back to 410.97. That's going to be for the SPY. If we take a quick look at the IWM, very similar price action. You can see that we have a cup and a handle. Right, you can see the cup and a handle here. You can see that we are starting to form a pretty nice handle. However, you can see that a lot of the indicators that I track are starting to reach points of exhaustion. You can see that we had the squeeze here, really strong move, but we are starting to lose a little bit of momentum. You can also see that the trend oscillator moved higher, but it is starting to look a little bit flat. That means that we're starting to see a little bit of pause in the buying, and that we are probably about to see a pullback. That pullback is also going to be, the level that I'm going to be looking is also that 21 exponential moving average, and the level of resistance is going to be this level right here of 189.58. That's going to be for the IWM. And then if we quickly look at the DIA, you can see that the DIA has basically traded sideways for this entire move. Is this bullish? Is this bearish? We can be 100% sure, but based on my indicators, you can see that most of the price action in the trend oscillator has been above that midline, meaning that we continue to see more positive action in terms of bullish action than bearish action. And you can also see that the TTM squeeze continues to trade above that zero line, meaning that we continue to see a little bit more buying pressure in this security. So the thing is going to be the same with the DIA. This is a little bit messier, but I think that as long as we continue to print higher lows, as we continually have doing, right? You can see all the higher lows that we continue to print in the DIA. I think that as long as we continue to print those higher lows, we need to keep this expectation that we're probably going to see a breakout from this trend line and perhaps a move into new high territory in the DIA. That is as long as we continue to hold the price structure of higher lows, that we have been seeing at these levels. Now, let's just take a quick look at the ETFs that I told you about. We were talking about XLV, XLF, and the thing about these sectors is that it's pretty interesting to see that XLV, which is one of the highest weighting sectors in the market, is actually looking pretty bearish. So I think that one of the reasons that this hasn't break down to the downside is because the market was pretty strong. But I think that this could be a really interesting trade going into next week. If we happen to see a little bit of a pullback, then perhaps we can see XLV going all the way back down to that 200 daily moving average. You can see that this is trading bearishly and that the TTM squeeze is also pointing to the downside. So that's going to be one of the sectors which I don't think that look pretty bullish. That's going to be for XLV. We can of course take a look at XLF. And the thing about XLF is that yes, this is trading right at the highs. You can see that we're trading right at the highs. However, even though that we're trading right at the highs, we're starting to see divergences. And this is the most important aspect of my edge. And this is actually what gives me an edge, right? So the last time that we had a divergence was right here. And you can see that we were making higher highs in price, but the indicator was not longer making higher highs, and then we saw a really strong move to the downside. We're starting to see the same thing happening again. You can see that price is making higher highs, but the indicator is no longer making higher highs, which means that we're losing momentum, and momentum changes before price. So my expectation is that we're gonna see a pullback all the way back down to this trend line before any next decision to the upside. So that's another reason. And remember that XLF is a huge weighted sector in the S&P and also in the DIA. So just have that into consideration. And then if we jump quickly into bonds, right, we can take a look at TLT. This is one of the very positive things that I see for the bulls. You can continue to see that we have a really strong cup and handle in TLT. You can see that we are trading basically at the high levels of the handle, which means that we continue to make higher lows. If this happens to rally into that 200 daily moving average, I think that's going to be probably a stopping point for bonds, at least for a while, because this is going to be one of the first touches of that 200 daily moving average. Another scenario could be that if we just blast above that 200 daily moving average, and then price will start to consolidate while that moving average starts to curl a little bit, and then we perhaps can go into stage 2 of price action, which means that bonds went from going down to consolidate sideways, and then we're going to start to see a really nice uptrend in the TLT. So that should be technically pretty bullish for stocks, because if TLT starts to go higher, then TNX is gonna start to go lower, and that's gonna open a window of opportunity for growth stocks to start rising in prices, because a lot of money is gonna flow to those sectors. So I think that overall the price action is telling us that it's pretty bullish. So this is gonna be the summary, right? That price action is telling us that yes, things are looking pretty bullish, but at the same time, things are looking pretty extended. So my expectation is that we're gonna see some sort of pullback in the market going into next week, or perhaps in the following week, that we're gonna see probably a sharp pullback, because we have seen these really sharp pullbacks and they're getting bought pretty quickly. So we're probably gonna see that kind of a scenario. That's gonna be my first expectation. I'm gonna be watching that 21 exponential moving average in most of the ETFs that we discuss as the first level of support. So that's gonna be it for the video, guys. Thank you so much for watching. I'm sure that if you use this information correctly, you're gonna be ahead of most of the traders out there in the market, and it's gonna help you make more educated decisions in your trading as well. So thank you so much, and bye bye. Peace out.